if you look at semiconductor production equipment companies in North Asia, Japan and South Korea in particular, we are more underweight now than we have been in a long time. Now, part of it is that many of these companies have rallied, but if we look at wafers, we are underweight there. SPE companies were underweight there. The reason for that is the increased competition from China. We've seen this playbook play out many, many times over the last quarter century. Shipbuilding, memory chips, semiconductors, cars, smartphones is happening again now in the most advanced industries in the world. So there we are underweight. Memory, we are overweight around the world. So again, it's very company specific, sector specific, but generally there's a lot to look at in hardware all across the region, and whether it's part of the EV supply chain or part of the smartphone supply chain or data centers, the physical build out or the equipment that's going there, there's a lot to look at in Asia. We're very constructive on the markets across the region.
Why the differentiation between memory versus wafer and equipment makers? Is it, I don't know, like humanoid robot story that really supports the memory side of things right now?
Not yet. I believe markets got a little too excited about humanoids last year. We were among them. We did a lot of work, and the amount of capital we allocated to companies directly benefiting from that was small. There's the MLCC companies, to some extent, reduction gear companies in Japan and China. We looked at those. We allocated some capital to those. But it's not so much the humanoids yet. It's the data center build-out, and there are other opportunities related to that, anything related to cooling, to the electricity, the power build-out, power transmission in India, we're seeing that. Robotics, of course, EVs, smartphones, all driving that. But for now, it's AI-led. And when you look at where the bottlenecks are and the competition is least, we find that in DRAM. If you look at where the bottlenecks are loosening up a little bit and the competition is increasing, and there's distortive economics driving the investment decisions in different parts of the region, meaning in China relative to Japan and South Korea, there we are allocating less capital.
But memory names, except for Samsung Electronics in South Korea, which did run 17% year to date. I mean, they had quite a bit of a rally so far in 2025. SK Hynix up 72% now year to date. Micron 40%. So do you see more upside for these names in the second half?
We still remain quite constructive on DRAM. There's upside to earnings estimates, which means there's likely upside to the share prices as well. Stocks follow earnings more than anything else. And when we look out into 2026, it's a little early to look into 2027, but for now, we remain quite constructive on memory based on what we see. More DRAM more than NAND, and DRAM-sensitive equipment suppliers more than NAND-sensitive equipment suppliers, but we like what we see so far.
Do you own NVIDIA? And even if you don't, do you think there's more upside?
Well, we own the AI leaders, but then we also own neighbors in that ecosystem as well, the AI enablers. So the cable and wire companies, the connectivity companies, the power companies, undersea cable companies, and all of those are listed here in Asia. The center of gravity of AI seemingly is in North America because of the companies that you mentioned and the largest market caps, but it's steadily moving towards Asia. And it's not just Japan, it's China, it's India, it's South Korea. So we're very excited about what we see.
You know, we've been talking about looking ahead to next week when Jensen Huang is likely to be in China, I think midweek around Wednesday or so. And of course, he's going to be having some pretty high-level meetings with Li Qiang and also He Lifeng, right, the top 2 and 3 men in China. And one of the things he's going to be talking to them about is obviously they've got this new chip that they're set to launch, I think, September, China only. It's not going to be all bells and whistles. It's not going to be the best technology, but it's going to be good enough that the Chinese are likely to be able to want it, right? I think they beta tested it there, and it should likely sell well, unless the president comes in and tightens or tweaks chip export restrictions again. I mean, for a company like NVIDIA, it's tough, right? New chip, China's a huge market for them. Demand looks like it's there. They could ramp production if they build up inventory, and then policy changes, they've got a problem. And this is something that a lot of companies in that vertical have to contend with now, no?
But they've been contending with it for a while. If you remember, if we go back to the first Trump administration, when a lot of these restrictions started, these companies have been dealing with it since then. The Biden administration actually, in many ways, in the semiconductor industry was even more punitive, and the companies have come through that. There will be new restrictions, most likely. We shouldn't dismiss the risk of that. But it's interesting, to come back to where we started the hour, this crisis fatigue that seems to have set in, but not complacency, the patience that investors are showing. If you look at the NVIDIA market cap or share price, it doesn't seem like people are worried about this for now.